G'day, Internet. Max Wright here, and we have a wonderful friend of the show here in Brett Fogle. Brett, thanks so much for joining us.
My pleasure. Anytime.
So let's get straight into it. We're going to talk about all things macro. We're going to talk about all things charts. Let's see what's in the tea leaves for Bitcoin in the coming weeks and months. What have you got for us?
Yeah, well, of course, all the eyes are on what's going on with Bitcoin, and so I thought I'd pull up some charts here and we could take a look. But the big news is the ETF was a sell the news event. We predicted and forecast we'd go right up to that 48.5, 49K level, which we did. We touched right on that and pulled back. And the big news is that GBTC is selling out. A lot of the users are selling out to book some profits, and then ideally they're going to be reallocating their funds once they settle out back into some of the other ETFs, which are priced lower. But I did read this morning that a lot of the sell pressure actually is coming from FTX selling $1 billion of their GBTC. So so we can dive right into that. If it's good, we can share my screen, and also want to tell you guys about a free training we're going to do this Thursday. So stick around. We'll give you a link to where you can join us for that. So just looking at the DXY here, we've been watching this in this nice downward trending channel. And kind of broke out of that. Right back here, we saw an inverse head and shoulders, and had the kind of commented to some of our followers and say, hey, I think this is going to push up as Bitcoin comes down. Of course, DXY inversely correlated to Bitcoin. So we're pushing up. I've got this circle drawn here as an area of interest here, and I'll just zoom in so you guys can follow. And, these trend channels really is one of the simple things you can follow. So breaking into a new uptrend, I think we do probably push higher as Bitcoin comes down a bit lower. And we've identified some levels here we can talk about. So in case you're wondering when to buy the dip, this is a good roadmap when it might be a good time to do that. I don't think the selling's quite over yet. A bit of a reprieve here, but I do think we push up on the DXY around this 104 level and then sort of retest that as resistance, and then we kind of come back down. Another view on the DXY here, which is the end of day data, but I have these zones drawn to where ultimately, eventually, we want to see this DXY pull back down and to what I have labeled a crypto super pump rally zone, and I think we'll see that. And certainly, if we really see the massive rally that everyone's expecting, and at some point after the halving, I think is when that starts to sort of materialize. And then all the way down here to the cycle lows here, we see the bull market mania. If we see that DXY back down below 100 into the 95 regions, which we saw back in 2021, that's when we know we've got the the bull market wind at our back. And so again, this is the DXY kind of zigzagging all through here as we saw the ups and downs for Bitcoin last year, and just waiting for that to kind of revert back down again at that level right around 104. And so anyway, we could kind of discuss that more, or just to sort of show this chart of Bitcoin here. We've had this drawn for a while now. And that Fibonacci golden pocket, really useful tool. If you guys are trading, Fibonacci is great. If this is new to you, you just grab the Fibonacci tool here in Trading View and go from the cycle high down to the cycle low and stretch that out. The golden pocket is that 0.618 to 0.65 region. So sure enough, we pushed right up into that area and touched on that. And we were sort of selling into that zone. Thought we might get another push into the 50K region, but had this zigzag drawn here for some time now, and came a little earlier than we thought. So thought it might play out a little bit later, but certainly we're down into buy the dip zone. So I think we do come down a little lower. 38K would be a great level to retest on Bitcoin, just to get to the meat of it, because of this level all the way back in here when we held it as support back in this region in 2022, and previously just kind of a nice liquidity zone. And we could see, I do have my eyes on this 32K level also. If for any reason we see a deeper sell-off, probably I think we'll bounce out of the 38K region either way. And if we do drop down, though, 32K would be a great level to retest. Not for hodlers, of course. You guys want everything to go up, but it's going to position us into a much higher bounce point. And we can look at some targets where I think we could see the cycle highs coming into the next area. But we're looking for this longer term trend line to play out. It actually goes back way farther. So this lower trend line here would coincide with that 32K level. If it stretches out into this, that would put us out into June. I think this would happen a lot sooner, but that would be the low point, and kind of coming out of this. But I do think we have lower prices ahead, and some reasons for that we can talk about on the macro side of things, and curious to hear your thoughts on the bank, the bank trend funding program, the bank term funding program rather, and how that might affect things in the near term. And but we can sort of see what the charts say. But I don't know, what are your thoughts on the macro side and what could be some headwinds we're running into?
Yeah, it's a little bit of a catch-up for everyone on what Brett's talking about there. The banking crisis that occurred March last year, what happened was the Federal Reserve steps in and says, you've got all these bonds on your balance sheet, and they are not worth what you paid for them. And this is meaning that banks are technically insolvent, undercapitalized, and it happened. And so what the Fed came in and did and said, we will buy your bonds at face value, not what the market is saying they're worth. But it was a temporary program, and so that program expires in March of this year. The general consensus is, it's my consensus too, it was my thesis too, is that the Fed is going to extend that program, because the theory was you give the banks a year to get themselves sorted out, but there is no solving this problem. The bonds are worth what the bonds are. As long as the short-term interest rates are high, as long as the Fed funds rate is high, the long-term interest rates at 3-4% are not very sexy. No one wants them, so they get bid down, and nobody wants them. Hence, their value drops. So my thought is that they are going to extend that program, kick the can down the road as they tend to always do. And I suspect it will be a pretty small speed bump. What are your thoughts, Brett?
Yeah, pretty exactly the same. And Arthur Hayes put out a really interesting article recently about that. And so basically, the government came out during COVID and said, buy these bonds. We're going to sell you these bonds. We won't raise interest rates. And so the bank said, great, we'll make some money on these. And then, of course, they did historic rising of interest rates immediately following that. So these banks are suddenly underwater on these bonds and these loans that they're making, because they thought they would mark up the bonds, and suddenly their interest rate adjusts, and so they all have unrecognized losses, massive unrecognized losses there. So I think they'll be forced to extend that. But Arthur Hayes suggested that there's a window where this funding program ends, and before the in the March area, he thinks we'll see some more bank failures. And then going into the March to Fed FOMC, they'll be forced to raise rates. So we could just see that as a catalyst coming down and kind of breaking the market. That's usually what happens. And then the Fed steps in and starts dropping interest rates. So what that means for us is if we do get a nice dip here, that'll be welcome and a great place to dollar cost average back into this dip zone around 38K. Lowest I see it possibly going, even in the worst news, would be down around 32K. Maybe a little bit above that. The people sitting on the sidelines might try to front run that. So this would be a DCA zone around 35K. So those of you that are wanting to catch the bottoms, you could put limit buy orders in. Not financial advice, but in these levels here, 32K, 35K. But I'll be accumulating here in the 38K range. We have some indicators that we use that kind of give us a heads up on when that might happen. But taking a look at the halving cycle here, this is kind of a new diagram. I'll just turn this off for a minute, and that has some interesting angles here on basically what could be coming. I'm going to open up down below on the weekly time frame too, the MACD rolling over. I don't use this very often except for the longer time frames, and this is how we were getting people out in January of 2022. That MACD had just really started to roll over. So we're seeing that on the weekly time frame, and also seeing some bearish divergence here on the weekly RSI and stochastics RSI. So seeing that come down, pegged this 100% level here, so this pullback was not a big surprise to us. Also on the RSI coming down here, but Bitcoin price was, until recently, pretty steady, so that was a good indication that we would come back down lower. But on this indicator here, this is a halving diagram, and what's interesting with that is if we zoom out a bit and open this up, the prior cycles we've had sort of this parabola where the when we draw it on here, the prices after the halving event, so back here in 2016, then things start to rise a little bit, a couple months after that, and it's sort of a right skewed parabola. So the halving here and then you see the parabola afterwards. And so then down in the dip, this is your DCA zone, and then later we see another halving, and we see this kind of right skewed parabola. So there's also some interesting people, smart people out that very few that I kind of follow, but I don't like to follow consensus. Consensus is dangerous, and so some people are saying that maybe this time is different. And let me turn on this other thing that's inside of here to kind of give us an idea on the, hang on one second, where did that go? Something visibility ranges, okay, for some reason it's not showing. But anyway, on the next halving coming into April, I think that we could see a left skewed parabola. So when we see that coming in here, then instead of coming that far after the halving, it could come a little bit earlier. So that's kind of what I'm watching and waiting to see. Because if we jump out and have a look at the cycle here, I've got this chart that I've shared in previous updates, 10 paths to potential 150K Bitcoin. I think that certainly 155 is going to be a likely area that we'll touch this year. I think 210 is the ultimate top. And that the reason for that are over here, which I can run through the different scenarios. Each one of these is sort of like a small smoldering campfire, any one of which, if it engulfs or inflames, would take the rest of them up also, like a good old-fashioned California forest fire. And we've just had the first one, the BlackRock and the ETFs, so we do see a lot of money coming back into the markets once things settle out a bit. And of course, they are also waiting for lower prices, which would make sense. And the short answer on the targets that I have here, just to zoom in case anyone's wondering, in the last cycle, when we do a Fibonacci on the high to low, this is pretty simple stuff, but it nailed the top right there in drawing that Fibonacci retracement on 3.618. So doing the same thing on this recent high to the low around 16.5, where we were forecasting that back in 2022 early, that puts us up in these ranges, and this is simply a bars retracement of when things took off back here in 2020, a little bit extended out. So we certainly could see this play out sooner than later. I'm not saying this is going to happen. I'm just saying we could see some explosive moves much higher, much sooner. And these are some of the reasons. BlackRock's and ETFs, QE money printing to pay down the debt. If you've been to usdebtclock.org, it's scary to watch these things spinning and spinning, and the amount of debt that we're taking on. At some point, they're going to have to start quantitative easing, and so to pay for our own debt as well as lowering interest rates. We can't afford our own debt. And like we talked about with the BTFP, we could see when that expires. It'd be interesting to see if we see more bank failures and possible bank runs, which could lead people to, as Larry Fink is starting to say, flight to quality, putting it over into Bitcoin. We've got the BRICS nations, de-dollarization, that's still smoldering, not really talking about it, but they're buying more of their energy over in those nations. Of course, that's Brazil, Russia, India, China, and I always forget which one that is on the BRICS, but essentially less demand for the dollar will cause hyperinflation potentially. Corporate accumulation, of course, we've got Micheal Saylor and MicroStrategy. I call it Micheal Strategy for short. He's been a perma bull, buying a lot of Bitcoin, and so he's even offering more common stock to buy more. And so it's only a matter of time before other companies like Apple and Tesla start buying Bitcoin in mass. So those are some of the reasons. Country accumulation, El Salvador is only a matter of time before more countries start buying Bitcoin. Post-halving, less miner supply to selling. So after the halving, currently their miners are selling $12 billion a year roughly of Bitcoin to pay for their mining rigs, their energy, etc. Once the halving happens, there will be half as much available to sell for obvious reasons, and that could lead to a more demand, less sell pressure on Bitcoin. And then political support in favor of Bitcoin is growing. We're seeing recently, so we've got politicians like, Cynthia Lummis is a great proponent. And so it's slowly building support in the political circles. So certainly as more of the public is interested in Bitcoin, we'll see more of that. And then number 10 is the bursting of the sovereign debt bubble from the COVID. We printed $35 trillion. It's still filtering its way through the financial circles out there. And so, any one of those could really ignite the rest. And that's what I've been watching for. And of course, there are some possible negative scenarios for a lower cycle top. Some people are suggesting we'll go lower, around 80K. I don't think so, but we could see a deeper sell-off because of the ETFs. Not really clear how that plays out. Some are speculating, but of course, a spot ETF is different than the futures ETF, which was cash settled, and that marked the prior cycle high. So, the only other things that could derail us: escalation of international conflict and wars often spooks the market in the short term, and if we don't get money printing, that would be bad for risk assets. But I don't know. What are your thoughts on the QE easing side? I think it's going to have to happen at some point, I would say.
Yeah, I mean, the Fed and the government are caught between a rock and a hard place, and they have to decide between one of two things. They're going to save one; they can't save both. They either have to save the global economy, the banking system, the intra-banking system, everything, save it all, and let the currency die, or you save the currency and let everything else die. And that's the proverbial rock and hard place that they're in between. They tend to always sacrifice the currency. So I think there's more money printing ahead in our future. I mean, at a bare minimum, at present, they just need to print money just to pay they're just running massive deficits. Just the US is running $1 trillion a year deficit. And I think even significantly more than that now with the higher interest rates they're paying on all of their debt. So the printing is baked into the cake and will have to happen. As much as they don't want to, but that's how these systems that they designed it must be exponential, or else it does. And of course, that which cannot go on forever will not. So the exponential system must die as well. So something has to break, whether it happens this year, next year, 10 years from now, 20 years from now. That's always the hard part. The timing's the hard part. We know where the puck ends up. It's just trying to guess that timing. So zooming in a little bit, Brett, on what you said there, I think I have kind of similar targets to you. The 32, 35, and 38 targets for the Bitcoin price. I have very, very similar targets as yourself. The question I have to pose back to you, let's say we're right, we touch that, we get a little bit of a bounce back. Do we ever see those numbers again, or is it off to the races post-halving? What are your thoughts?
Good question. Yeah, I don't think we see those numbers again, although if we really wanted to pull up an interesting study where I think I know where the next bear market low could be. So do we ever re-see these numbers? That's dubious speculation, as some people call it, but I don't think so. To come back to 32K support would be a very strong support level, because again, if we zoom back all the way to 2021, even the end of 2020, that was a strong support level. Once it broke through, came back, held as supporter right through this area through in the middle of July 2021, when we saw that midsummer pullback, and we caught that rally right out of the bottom there, and then it became resistance back here. So 32K is really an important level. And so drawing this trend channel on the way up here, we do have to be aware of these pullbacks are common. 30% pullbacks, even if we draw it from back in August of 2022, 38% of a pullback. But I think, I'll draw it from here, 28%. We had two 20% pullbacks, one here and one down in here. So, I think to come down to 38K, reasonable, that would be 22%. If we did come down to, let me just grab this, if we came down to the 32K, it would be 35% pullback. So that's well within that range, what we saw back at the beginning of the trend channel. And of course, coming out of the bottom of these trend channels has been the best time to be accumulating Bitcoin. And so, do we ever see those lows? If we pull up the hash ribbon indicator, usually that's a pretty good indicator of when we will not go below those levels. And so, certainly back at the 16.5 level, I think that's firmly in place. We won't go below there. There is a CME gap still around 20K, but I just don't see that. I think 32K would be the lowest in the 32K to 35K range, and all the way up to 38. So, but that would be after a next bear market. For now, I don't see us going back to revisit those levels once we push higher and into some of those higher levels. But I've had this drawn for weeks here, 27% pullback as possible. Again, up in the upper range of this trend channel. Another reason why we were looking to sell and take profits right in this zone. So when it did spike up to 49K last week, we were kind of advising to take some profits right out of that range. And so it'll be interesting to see what happens the rest of this week. So I guess now would be a good time to just share with people. If you'd like to hop on a live session with me this Thursday night at 8 p.m., that's going to be at moonstream.io/Max Training. And so Max has given us permission to share that with you. And encourage you to come join us. We'll go in a little bit deeper dive into some of these charts. And for sure, we'll talk about that study we did on where we think the next bear market low could be. Unless you want me to pull that up, I have to dig it up here for us. But
no, you're fine. You save that for, and that's a completely free event, by the way, right? That training.
That's right. Mm-hmm.
So guys, I highly recommend you take advantage of that. That's just it's a very, very generous gift that Brett's sharing. Brett, anything else you want to touch base with before we sign off?
I think we covered a lot of it. We'll cover altcoins, and it's going to be live looking at charts here this Thursday night. Kind of a look over my shoulder, what we're looking at, what we're wanting to buy, and so. But again, the long story short, having a pullback into this range down to 38K, I think was reasonable, and so then pushing higher into that higher levels. Once we're above 50K, though, I think we're off to the races, and there's not a lot of sell pressure there. So after 50K, getting above that, pushing up to retest the old highs. Still some strong sell pressure around that 49, 50K range. So, could zigzag a bit as I've drawn. These are some scenarios, but, again, we'll go into that a little more detail here, and we can even look at some altcoins. I did want to touch on something briefly, though. This is the chart of the iShares, or sorry, not the iShares, the Bitcoin, the Bitcoin iShares Trust here, just as a 2-hour trend, and for BlackRock. So I'm watching this level here around 2450 and have alerts set. It's right around the 50 period moving average. So, this is going to be a tradable product here for those of you that are not as Bitcoin crypto friendly. Of course, it's a crypto channel, but this could be a good barometer of where things will be heading, and certainly be interesting to see. But I think it's going to be a really great year for us in the markets. And once we sort of get closer to the halving and into these ranges and breaking up again around this 45K support resistance level, then really pushing higher as we see in these zones over here. So anyway, thanks for watching, everybody, though, and thank you, Max. And if you have any questions, certainly happy to answer those. But be good to update everybody on what's going on.
Yeah, awesome. And I'll just finish off with reminding everybody the mantra that I say almost in every video for the last year and a half here. Remember, 2023 is your sideways bottom of the market accumulation year. 2024 is going to be a good year. And remember, the sideways year was plus 150%. So 2024 is your good year, and 2025 is your great year. So this is the time to accumulate. So that's why I love having Brett on. He'll tell you those. Everyone wants to buy the dips. It's a little harder to do in practice. That's why I have Brett on, and there's a lot of the other guests that we have on to help us try and find those dips. We're giving you those targets in advance. Can we promise 32, 35, 38? No, but they are really, really good levels to dollar cost average in. Buy those dips and set yourself up and hold for the next year and a half, and a little bit longer throughout 24, 25. And I really take those profits. So I just like to reiterate that. You're probably sick to death of me saying it because I say it in almost every video. But that's the formula for the last year and the next 2 years. That's the formula. So do that and really take advantage of Brett's thing. It'll be a very advantageous on Thursday. So go ahead and do that. You can see the URL on the screen there. And guys, the link will be in the description as well. And we'll see you soon. So hit the like button, hit the subscribe button. See you soon.